Good morning, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this Tuesday, the 30th of November, 2021. Thank you for tuning in. Now, here's what I want to tell you guys. What's one of the purposes of my show? Well, I've been warning you guys for years. Like 6, 7 years I've been on here warning you guys that it's coming. Well, it's been slowly coming. It has been slowly coming. It's got a heck of a lot worse than it was 6 years ago. But, I warn you guys about these things for a reason. So that you can try to maintain your lifestyle to a certain degree, in the fact that you can make the proper sense with what you should be doing with investments and stuff, and you can figure it out so that you can feed yourself. Because I'm telling you, it's hard times. Hard times are here. And if you know what you're doing, you'll be able a little bit of money on the side, besides not being broke all the time, completely broke all the time. And I'm going to tell you guys, and what I'm going to show you this morning is going to help you a lot. And we're going to get right in there and take a look at what I got to show you. So let's open up the charts right here and take a look. What I'm going to show you, this is a long-term Dow Jones chart right here, And this goes way back to 2019. And it shows the whole pandemic here on what the Dow Jones did. You're saying, well, why is this important, Glenn? And I'm going to tell you why this is important. You see right in the middle of this chart, there's this big dip. You see that big dip? That was the start of COVID, right? And that was the stock market falling when COVID was starting. Back around 2020, we're looking around March of 2020, and the stock market was in free fall. You guys remember? It was in free fall. It's just crashing. Crash, 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 crash. It crashed down under 20,000. Right? And then the reaction. So all this upside you see here to the present time, well, I shouldn't say upside to the present time because I'm going to point something else out to you guys. But all this upside, this massive upside, can you imagine the people that bought in on the very low end of this dip down when it was down around 20,000, how good they've done? They bought into equities. How good they've done until now, and they've ridden this whole thing all the way up to 35,000 or more. Okay? But there's another thing I want to point out to you guys very carefully here. That it made it up to where it is right now way back in the, looks like 5th, 10th, 21. And it's been going along sideways for all these months. Basically just treading water sideways. Okay? I want to point that out to you guys. That treading water sideways for a period of months now. And that's because COVID is like, we were starting actually, for a number of months there, we were starting to see COVID in the rearview mirror. And this whole big pump of the market was all COVID related. This enormous pump in the market. Now, it's not just in the Dow Jones. Let's take a look at Bitcoin. Bitcoin felt it more than the market did even. Bitcoin is more reactionary toward what they were doing with COVID. If you take a look here, Bitcoin was drifting along. It was like $8,000, and it went all the way down to 3,400, 9,000, 9,000, 8,000, 7,000. It was going along basically more or less flat, right? And then what happened in here? Well, it was a little bit of a delayed reaction. It didn't take off the COVID quite as quick as the markets did, but then all of a sudden, boom, it took off. And what do you think this rise was caused by? The same thing that was rising the markets up. It was the net effect of the pandemic. Push Bitcoin. Look at what it did. It pushed it up until we're up like just like the markets. Boom. Same fuel. It's the same rocket fuel. Stimulated the markets up to where they are now. It's stimulated cryptocurrencies up to where they are now. But look, I want to point something else out to you guys. I want you to take a very careful look at it. For the last number of months, since, well, I guess around November 3rd, 2021, all this time along here, uh, the price has been, actually, it's been slightly declining. We've had a few bounces up. We had this bounce up here and the stuff, but for quite a while here, the price has just been basically going along sideways, just like the markets. That's what I want to point out to you guys. Basically, just like the markets. It saw that massive raise up in price to where it is now, and now it's been going along kind of sideways for the last few months, while we've been having COVID sort of, not really in our rear view mirror, but sort of there in our rear view mirror. Okay, so what we've seen is we've seen the Bitcoin price basically going along sideways. Now, what about silver? We got the silver chart here. Let's take a look. Now, if we take a look here, this is a long-term chart of silver. We seen silver was the same story. It was going along $14. It went all the way down to $12.28 there in a dip. But it was basically $12, $15, $18, $17, $14, along in there, $15, $16, along in there it was going. Just like Bitcoin was like 7,000, 8,000, so on. And just like the market was down too. Everything was down, right? And then what happened in here around the same time period? You see it on the end of the chart? We see this zoom up in price at 28 bucks, 27 bucks for silver, 26, 27, right? And it went along like that, 28 bucks and so on, right? And then it started to go flat. The air started to leak out of the tire, and lately it's been 24, 23, 22, see, along in here, right? But we've seen this big price increase in silver too. That's put it up to over $20 mark where we see it today, like to what, $23 or something, but it was like 26, 27, right? Exactly the same pattern all over again in gold and silver. You can talk about gold and silver suppression. Yes, it might be suppressed somewhat, but it did see a big rise in price over pre-COVID levels of, like, look at it right in here, $14, $15. Right? And now it went up to 27, 28. That's quite a little increase in price. Same darn thing. But on the charts, it has that same look. It just didn't receive quite as much of the stimulus, of the COVID stimulus. So what do we got happening again? Let's go back to where we started. It says, who warns of a perilous spread of the Omicron around the world? Well, what causes all this movement and up in price of all these asset classes and all this speculation and money that's fueled into pumping prices up? And look at what it did to real estate. Real estate was an incredible story. I failed to mention that. Well, boys, it's over the last 24 hours now. I've been watching this very, very carefully. It looks to me like the effect that is caused when they come in there and it looks to me like the effect is coming. It looks to me like there's going to be a huge worldwide effort to try to stop this, what they call perilous spread. It looks to me like it's coming. It looks to me like we're going to see, and it could have exactly the same reaction. But what do we see happening in the markets right now? We see them treading water and going down. Things falling. That's exactly what it did before COVID came last time. That things fell. Well, people that bought in made out really good, right? Well, it seems to me that we're repeating. It's almost like to me, in my mind, I see all this as a wash, rinse, repeat. Wash, rinse, repeat. In the market sense, looking at it in a, not looking at it in a sense of of the disease itself, but looking at it in the sense of what it does to the markets. It looks to me like it could be a wash, rinse, repeat cycle. Because, you know, they have to support the people. And if this requires stimulus, if this requires the Fed go back to an accommodative stance, well, that's what'll happen. They will go back to an accommodative stance. This looks to me like this is setting up to be some sort of a wash, rinse, repeat on with the way it affects the financial markets. And if it does turn out that way, in the last 24 hours, it seems to have been swinging in that direction of a wash, rinse, repeat. Then these fall, we're seeing prices falling on these things, like gold, silver, cryptocurrencies, equities. This is only going to be a temporary thing. And it might get worse. Now, just because it's temporary, it might get worse. But ultimately, it'll lead to more stimulus measures. But here's the thing, guys. Now, I'm going to get to the crux of the matter right now. The crux of the matter is, we've went through all this stimulus, and we've basically indebted the system so deeply. It's called leverage. That's what it's called. We've over-leveraged the system to the point now where they can't let the leverage expunge from the system. And so if we get another big wave of leverage coming in, we're going to see it boost all these asset prices up even higher than they are now. But it's going to trigger something. And that something that it's going to trigger is called inflation. Now, we saw the last boost in leverage of all this that happened last time. We saw it trigger inflation, but a moderate degree of inflation. If we get another one right on top of this, it's not going to trigger moderate inflation. It's going to start to trigger heavy inflation. It'll trigger a second wave of inflation. Not to speak of all of the out there, we have all of these supply side deliveries and everything else coming in from shipping and everything. It's all backlogged and everything else. How this puts a bind on that is absolutely incredible. On goods being delivered to warehouses and stuff like that. Well, on the other side of that coin, it also creates heavy consumer demand. The two don't go together, guys. What they do is they drive prices up. I said in one of my last shows, if you think you've seen inflation now, you haven't seen inflation. You could see price increases. You could see. I'm not saying you will, but you could see price increases of like 10% per month. Forget yearly inflation. We would have to start talking in monthly inflation terms. Okay, that being said, let's take a look at what's going on in the markets today. Let's start with the silver price. Today is at $22.80. Today it's down 7 cents. Now see, we're in this downtrend, and that same downtrend happened on the initial side of the virus the first time it came around. But what happened after? It's what happens after is what you got to concentrate on. Okay, so we're in the downtrend. $22.80, really cheap price on silver right now. Let's take a look at cryptos. Basically, I think what I'm trying to say is, the worse this turns out to be, the higher it's going to send all of these asset classes on the other side. You think it's over for Bitcoin? We're looking at Bitcoin right now. You think it's over for Bitcoin? Bitcoin has a cap. It can't go any. There's no cap to Bitcoin. There's no cap to the price. What's an expensive and what's a cheap Bitcoin is all in your mind. It moves up to a new price level. You know, like right now, if Bitcoin went down to $45,000, everybody would be saying it's a cheap Bitcoin. That's a cheap Bitcoin, $45,000. Wow, that's a cheap Bitcoin. Well, if you were to go back 8 years ago when the price was like $60 and say, okay, a $40,000 Bitcoin, guy'd say, "What, are you kidding me? They're only $60. $40,000 is an expensive Bitcoin." It's all in your mind. So if Bitcoin goes to $600,000 and then drops back to 300,000, you'll be saying 300,000 is a cheap Bitcoin. It's all in your mind. There is no upper limit to Bitcoin. So Bitcoin today is at 2641. Let me refresh the page, and that way we can see which way this is going. 2644. So it's going up right now. We're looking at Bitcoin price of $58,016. And you know, it's the same way with gold and silver. They don't really have the upside potential is absolutely tremendous for gold and silver. But now we got to take a look at downside risk with cryptocurrency. The downside risk to cryptocurrencies is they can go to zero. Gold and silver can't go to zero, or there won't be any gold and silver, because if gold and silver try to go too low, they run into what's called mining production cost to produce them. And that's a limiting factor for gold and silver, is the mining production cost, which is quite exorbitant, by the way. Mining production cost takes up an awful lot of what you pay, so you're getting great value. When you buy a piece of silver, what it costs to get that out of the ground is a good chunk of what you're paying for it. So you're getting something for your money with gold and silver. Okay, that being said, we're looking at cryptocurrency price today, and now we're going to move on. And we're going to take a look at the Dow Jones today. We're looking at it's down 385 points, or 1%. Same thing. And the worse this is going to be, the more upside potential we're going to see for equities too. Okay, let's take a look now at crude oil. 67.86 is down 2.99% on the day so far. That's a cheap price for crude right now, 67.86. You know what? I think one of the big worries why the crude price is dropping off is people don't drive much during a COVID. When the whole thing, people don't move from one place to another as much, and so they don't use as much fuel during one of these periods. And because they don't use as much fuel, there's not as much demand for crude oil, and they might be front running that right now. Let's take a look now at so that might be what's happening with crude oil. Take a look at the MOVE index, 89.41. It's almost up to 90. I'm telling you guys, that's too high. We've got a little bit of instability in the credit markets now. We've got to keep our eye on this MOVE index. Let's take a look at bonds and rates, and we're seeing some big 10-year, 10 basis points today alone on the 10-year. It's 1.42. U.S. 30-year at 1.8. Still see the inversion, 1.86 on the 20-year. Looking at massive drop in yields today. Massive drop in yields. Somebody's buying these bonds to see this kind of to see the bond market. Actually, if this was the gold market right now, you'd be seeing a $50 increase in the price of gold if this was transferred into the gold market, the equivalent of the bond market right now. So bonds are in a bubble right now, and the bubble's only getting bigger. Seeing a massive drop in yields today. Big time. Let's take a look now at the Dixie. Dollar index 95.68, and the dollar's dropping today. Okay, this has been your market report. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.